Thank you everyone for joining us for the webinar today. Our hosts will be Jeff Long and David Ennis. So Jeff, I'm going to hand it over to you now.
Well, thank you, Elizabeth. Good morning, everyone. First, I want to thank everyone for joining us. I know it's a Friday. Back when I was an agent, Fridays were kind of my days to do paperwork and goof off. So I appreciate you taking the time to join us at GCU. I am the regional vice president for the Midwest region. Prior to that, I was national sales director for GCU. So I spent 3 years in the home office and got to work very closely with David Ennis, who is my co-host, who, by the way, is camera shy, so you will not see him. You will only hear his very intelligent statements. David is the smartest guy in the room as soon as I walk out the door. And that being said, this is a new thing because this is the first time that a GCU webinar has been hosted from sunny Sheboygan Falls, Wisconsin. So I'm currently living in Sheboygan Falls, and anyone knows where that is, I'd be surprised. But we're about an hour away from Green Bay, and I'd rather be at the draft, but it's there's probably a 2 hour drive when normally it's a 1 hour drive. So that being said, once again, thank you. Feel free to send us questions throughout this, and we will take questions at the end as well. And this is being recorded, so if you have to go hit some golf balls or do something more fun than this, don't hesitate. You can come back to our website and find it recorded. So thank you very much. First, we're going to talk about what GCU is actually all about. I think I am. There we go.
There we go.
Whether you are a long-term GCU agent or freshly appointed with us, one thing is for sure. GCU is easy to do business with. We answer the phone and we know your name. If you call GCU, you will not be dealing with the endless phone mazes of large commercial carriers. We freely give out our direct line phone numbers. If you need to talk to new business, call Marilyn at her desk. Need help from sales? Call David. Maybe it's simple and old-fashioned, but we like it that way. Although agents know that GCU is easy to do business with, many are unaware that GCU is a fraternal insurance company. Now, what does that mean? Fraternal insurance companies, also known as fraternal benefit societies, are not-for-profit insurance organizations. They are member-owned and operated for the benefit of the members. We don't have stockholders, and private equity firms can never buy us out. GCU has a 132-year history of focusing on Main Street, not Wall Street. As a fraternal benefits society, GCU offers our members fraternal benefits separate from the benefits they get from owning either life insurance or annuities. These fraternal benefits are available to our members at no additional cost. Let's take a moment to learn more about these benefits. First, let's talk about the GCU Scholarship Program. The GCU Scholarship Program is very popular with our members. We offer several different scholarships. The National Scholarship, which can be up to $2,000. The Academic Scholarship, up to $1,500. And 2 athletic scholarships of $2,000 each. To be eligible for a GCU scholarship, the applicant must either have a whole life policy in force or an annuity with at least $2,000 value. For more details about our scholarships, go to gcuusa.com. GCU also offers a student debt relief program. Members paying on student loans that meet the program requirements are eligible for annual awards of $1,000 per year for up to 4 years. A simple but effective way to make a difference in the community is the GCU Go Give and Go Give Direct programs. Go Give allows our members to identify a need in the community, recruit friends and neighbors as volunteers, and GCU will provide a $250 gift card to purchase supplies for your project. Our members have used Go Give to clean up an elderly neighbor's yard and garden or used it to paint park benches. The Go Give Direct program matches members' monetary donations up to $100 annually to their favorite charitable organizations. It's the little things that make a difference. A fraternal benefit offered to all GCU appointed agents is the Agent Matching Fund Program. At GCU, we know that many of our agents are active with charitable organizations where they live and work. We want to help you make a difference. If a charitable organization has a fundraising event that you actively participate in, GCU will match the event's profits up to $1,000. If you, as an agent, are also a member of GCU, we will match up to $2,000 for your organization. There are several other fraternal benefits such as social events, discounted tickets to sporting events, theater and symphony performances, and amusement parks. We offer Perk Spots, which is a discount retail portal where members get a discount on thousands of things, including travel, car buying, and more. To learn more about all the benefits offered by GCU, please visit gcuusa.com for more details. So, there you have it. GCU gives people financial peace of mind, a chance to make a difference in their community, and can help them save money. GCU works for Main Street, not Wall Street, and we couldn't do it without agents like you. Your efforts allow GCU to have the financial ability to make these wonderful benefits happen. Thank you for all that you do.
I think it's very important to start with this video. I've been in the business about 33 years, and the first 8 years were with a commercial company. And once I joined a fraternal insurance society, I never looked back. I really believe in the fraternal mission, and I think it makes us different from the big boys, from the big companies. And it's great that we don't have stockholders we have to deal with. We'll never be bought out by private equity. Our members actually own GCU, and that makes me sleep good at night.
Hey Jeff,
Yeah.
we've got a question.
Okay.
Which since it's pertinent, we might as well answer it now.
Sure.
Is the scholarship program open for applicants anytime during the year? The answer to that is not really. The scholarship program opens up at a specific time of the year towards the end, and
Right.
then there's an actually application process and acceptance period. So,
And I believe we do send out email blasts, correct?
we sent. I think Basil sends out at least 3 or 4.
Right.
Plus, it's in the magazine.
Right. In the magazine.
And you can always go to the website. You can always go to the website and look it up, at any time during the year, but it's towards the end of the year.
And you and I, David, both know not enough people take advantage of it.
I've been here 11 years. To my knowledge, we have never turned away a qualified applicant yet. I would love to make the board of directors sweat a little bit because we just got inundated with applications. That'd be awesome.
Right. It always makes me sad when we don't give money away.
Yeah, exactly. We're not for profit. This is what we're here for.
Right. So, David, do you want to take the fixed annuity portfolio?
Sure, my pleasure, buddy. Okay, the legacy products on the annuity side are the 1+4, the Triple Advantage, the Flex 5, and the Flex 8. They're simple, but that doesn't mean that they're boring or commonplace. There's a couple of tweaks in here that you're just not going to see anywhere else. And we're going to start with the 1+4. It is the most unique annuity out there. To my knowledge, there was only one other window annuity in the marketplace, and that was KSKJ's, and it's been gone for a year now. So this is a window annuity, meaning that you have a 30-day window part of the way through the surrender period where you can do anything you want. Since it's a 1+4, you can pretty much guess where that window comes in. It comes in after the end of the first year. That's why it's 1+4, not 1 times 4, not 1 by 4, not 4+1, 1+4. So first year plus 4 more years. Okay, how it works. This is actually an update from how it used to work. We didn't used to have base rates. So the 1+4, it had a rate, the Flex 5 had a rate, all the different annuities had a rate. Since we introduced base rates to allow our book to actually be properly and suitably sold again after it comes out of surrender, it opened up an opportunity for folks because now with the base rate, you can sell it after it comes out. But the Flex 5 used to be the barometer where the 1+4 gauged its years 2, 3, 4, and 5. So if you look at the chart, it says 415 over year 1. Then you see how it says 510 over years 2, 3, 4, and 5. That's the new business rate for the Flex 5, because that's what the 1+4 does. After that declared first year, it basically once a year takes a look over at our Flex 5 and goes, hey, what's the new business rate on that annuity? And then it mirrors that for the next year. So in year 2, if nothing changed, right now our rates are 415 for the 1+4 and 510 for the Flex 5. If nothing changed for the next 5 years, then starting in year 2, the 1+4 would get that 5.1 rate every year because it checks with the Flex 5 once a year. Now think about it. The Flex 5 is actually going to go to its base rate. The 1+4 is going to get the first year rate off the Flex 5 for a blended rate, pretty darn good. And the upside for that, if you go back one slide there, Jeff. Yeah, see, there's maximum issue age, none. So we have people that are over 100 years old that have this, on the books right now.
I think the oldest is 106, correct?
I believe so, buddy. I believe so. Matter of fact, we have an agent that's been with us for years, and one of the 1+4s is his dad. He keeps rewriting it every year,
Okay.
which makes me laugh because our system only goes up to 2 digits, so I have to keep doing a workaround to allow it. But it's when you get 100 years old, sorry, system didn't anticipate it. But it doesn't happen that often, and I'm happy to do it because it's just a nice product for those wonderfully veteran people that are going, why can't I get a decent rate out there just because I'm old? And
Right.
you don't have to turn those people away. You can go, listen, you can make it a year. I'll take you from a good 1-year rate to a great 5-year rate.
Awesome. Great point.
Let's go to the triple advantage. Okay. Oh, almost forgot. One other thing on the 1+4. I forgot. The most important thing, that 1+4 after that, during that 30-day window, they can do anything they want. They don't just have to go into another 1+4. They could go into one of our other annuities. They could take their bat and ball and go home. So after that year, it doesn't matter. They have all the flexibility in the world for 30 days. So day 1 of year 2, and for the next 29 days thereafter, everything and anything they can think of that they want to do with their money, they can do. So if you've got a client out there that's just a little bit curious as to, I'm not sure what's up with this GCU. I don't know how to spell GCU. I've never heard of them before. This is a nice way to put the camel's nose under the tent and sort of get them comfortable with it, which is a very, very common thing for people to do. And the folks that have known us for years, a lot of the times they put their money into the 1+4 just because they want to have a place where they're not committed for too long a period of time, and they want to have that option every year. We even have some people that have got to write a new one every 3-4 months. So it's their idea of laddering, so that every 2-3 months money comes out and they have an option to do whatever they want with the money. There was one guy up in Wisconsin, Jeff, years ago that had 12 of them. He wrote a new one. He wrote a new 1+4 every month
and just renewed it. So
So he had 12. He had 12 rolling. The last time I looked into the system, I think he had like 90 or 100 different 1+4s that were historically on the books. So it's a neat product. You're not going to run into another one. So if you want to differentiate yourself from the competition, that's a good way to do it. Day 1 of year 2, correct? Yes, day 1 of year 2. So you've got 30 days starting with day 366. Day 1 of year 2. So I would always tell every agent out there, it's like, listen, just put a little tickler in your calendar so that you're calling your clients at month 11 about their 1+4, because it's going to come out. It's going to have that 30-day window, and if you miss it, and if they miss it, it's gone. So your fault, their fault, nobody's fault. If they forget about it, we can't get it back.
Put it in your CRM.
Yeah, exactly. That's why God made calendars. Okay, Triple Advantage Plus. It's a MYGA for you folks who don't do a whole lot of annuities. It's a MYGA, a multi-year guaranteed annuity. The rate is the rate. So if whatever it is to start off in year 1, and right now it's 4.9 for 50,000 and more, then that's the rate for the next 36 months. Oh, got someone else here. Hold on one second. Does one for if not reduced to the 5.1 change? That's what I was saying before, Tom. It looks at the Flex 5. He's just got a question on the 1+4. And without getting into it, let me take that again at the end of the because I don't want to muddy the water here with the triple. So Tom's asking about the 1+4. I'll get to it at the end, buddy.
We'll circle back.
So 4.9 for 50,000 or more on the triple advantage. It's a multi-year guaranteed annuity, so 36 months. If you could promise someone that they're going to get 4.9 for the next 3 years, and no one knows what's even going to happen tomorrow because rates are going up and down all over the place, that would give a lot of peace of mind. So that's a pretty solid product for them. Free withdrawal starting in year 2. It's only a 3-year annuity, so you can't have that much liquidity to it. That's why the 1+4 is a bit of a unicorn. But you do have 10% in years 2 and 3 on the triple. A nice option for them. Flex 5. Flex 5, this is where that rate from the 1+4 comes from. The Flex 5 has gone by a number of different names over the years, but it literally is the sister product of the Flex 8. The difference is that this is the product that you offer your clients if they have liquidity concerns. So versus the Flex 8, obviously it's a 5-year surrender, so it's 3-year shorter time horizon. And not only does it have 10% starting in year 1 as far as a free withdrawal allowance, it has a 20% free withdrawal starting in year 2. So 2, 3, 4, and 5. And not even the original principal 20%. It's whatever that year's beginning number is, 20%. So they could even throw in 50 grand in year 2 and in their existing annuity, and in year 3 that 50 grand is included in the calculation to determine what their 20% free withdrawal is. So all of the GC legacy annuities, they're not single premium annuities. That's another differentiator out there. You can add money in anytime during the surrender period, and you can still add money to them even when they come out of surrender, which is a little unusual.
Exactly. Yeah, David, you hit the nail on the head with that one. You've got clients who are concerned about liquidity. 5 years is a good term. It's not too long. But what if I need access to my money? This is a perfect solution.
Yep. And the big dog at the party, the Flex 8, it's always, no matter what, always the one that brings in the most money at GCU, year in, year out. Bad markets, good markets, it doesn't matter. It always has the best first-year rate that we have, except I think there was an inverted risk curve there for a month or two where it got a little bit low, but then went right back up again. Right now, the new money rate is 5.6, and we're always going to, because we have the most time to play with the money, we're always going to try to give that the best rate possible. It goes to whatever the current Flex 8 base rate is after that first year. Right now, that's 4.5, but 4.5 is still pretty strong in a flexible product. And again, they can add money to it every year, any year, even when it comes out. So it's up to $1 million. We have got multiple situations and examples of people putting in more than $1 million. I dare you to put extra money in there. That'd make me very happy. I love getting approval. So if you've got, don't worry. It's like, oh gosh, I've got 1.3 million. They'll never take that. Yeah, we probably will.
Great point. If you question you're over the limit, definitely call David. We'll come down to the smart people who count all the money, and we'll get you an approval if it makes sense.
Oh, I will touch on one thing though. The Flex 8 does go up to age 85. It didn't used to. That's something we added about 6 years ago. The commission structures a little bit differently. I'm not going to go into the specifics on it. Just know that if you sell a Flex 8 and the person is age 81 through 85, you're not looking at a by deposit commission. You're looking at a trailer commission. So that's just the way it works out with the mortality tables. Okay, buddy. That's it. All you.
Okay, let's talk about our life portfolio. GCU has got you covered. We have competitively priced term, 10, 20, and 30-year term products. We have a neat little whole life portfolio that fits your clients' needs. Really perfect for seniors. We also have an in-house burial trust. The only reason saying IBT is something we do internally. We don't job it out. There's no vendors. And of course, we've talked about the fraternal difference. So let's look at the term insurance quick at a glance. 10, 20, and 30 years. One of the little quirks, and it's a long story and it's circle. The minimum age you can run is 25. And that's because we used to have a juvenile term product that went up to 25. We no longer sell that, but we did not lower the minimum age for our grown-up term. So just be aware, 25 and up. Minimum face is 100,000, and we have 5 underwriting classes, and of course, it is contractually convertible to whole life. So here's a little screen on how the rates compare. My scenario is a 40-year-old male, a $250,000 face, and this is the annualized premium. So you can look, the premiums are really competitive. So you look at a 40-year-old for a $250,000, just standard non-tobacco, it's $420 a year. We had our actuarial firm actually compare our term rates to some of the big competitors, and we're in the top 20% when it comes to premium. So when you factor in, we may not be the cheapest, but we're also going to add all those fraternal benefits. That's something to look at. Those fraternal benefits do bring value. So, our preferred non-tobacco, preferred plus non-tobacco rates are absolutely killer. So if you got a marathon runner, vegan, definitely look at our rates. Tobacco rates are solid. A quirk in our term rates is we are incredibly inexpensive for female smokers. I don't know why, but if you're hanging out with a bunch of female smokers, don't forget about us.
If you've got some nurses that you're talking to, there's an outsized portion of that population that are female smokers.
Well, they know better. So let's get into our whole life. So first, we're going to start with the Legacy Advantage. This is your grandfather's life insurance. It is the most basic, pay to age 100. It's participating, so we pay dividends. And David, have we missed a dividend ever?
Never in the history of the company.
But we will not guarantee it. Nobody can. But we haven't missed one yet. So just feel comfortable with that.
I don't think, hey, Jeff, I don't think that the system knows how to not declare it, quite honestly.
That's true. Cool thing about dealing with fraternals is if you've got clients looking for small face amounts, you got to look at the fraternals. We can write as low as a $5,000 policy. I don't know why somebody would. Maybe they're buying it for in juvenile situation, but it's there. Issue ages 2 months to age 85, and this product really works in any market. Another whole life product, our Legacy Advantage 20. It's a 20 pay. Once again, very basic, very straightforward. Pay the premium for 20 years, and that contract is paid out. Same thing, 5,000 minimum face, participating, same age, starting age, 2 months. This one's a little different. The traditional product goes to 85. You can write this as high as age 80. Great for young children. If grandparents want to buy policies and make their grandkids eligible for scholarships. They don't have to worry about a whole life premium, for the lifetime of the child. They only have to deal with it for 20 years. So good for young children, good for pre-retirement, and definitely in the senior market.
Hey, Jeff. Jeff, tell what is it about this product that makes it interesting for the senior market?
David, you cut me off. I was just going to jump on that. So yeah, good point, Dave. So the senior market point, Dave, would you say 65, 70, 75, right in that kind of range?
Standard issue non-tobacco 70.
70.
The more, if you add factors, it drops lower. So if you add a smoker rate, it drops down to like 64, 65.
Okay. So if you're looking at and you're quoting somebody who's roughly 70, run the traditional pay to 100 policy, and then run the 20 pay. Traditionally, there's kind of that break-even age where the 20 pay is actually going to be cheaper than the pay to 100. And when you're sitting down with a 70-year-old or 75-year-old, what story do you want to tell them? By the way, if you live to 100, you got to pay the premium to 100, or you only have to pay this premium for 20 years and it's cheaper. So make sure, if you have any questions about it, you reach out to me or David. But it's just one of those kind of actuarial quirks, but definitely be aware of it because you'll sell more when it's cheaper. As David called the Flex 8, the granddaddy of all, our single premium whole life is incredibly popular. I do believe it's possibly one of the best single premium whole life products in the market. Here's a little scenario. I've got a 70-year-old female. An agent sat down and did a fact find and said, Betty, what's that $60,000 CD doing in your bank? What's it for? And Betty told the agent, well, I want to leave that to my grandkids. So the agent, being smart, said, well, can I show you a better idea? So $58,304 would be the premium. That would buy a $100,000 death benefit. And if you look, the main thing you look at is the third column is the guaranteed cash surrender value. So Betty put 58,304 in, and her guaranteed cash surrender value at the end of year 3 is 58,304. She's got all her money back. So if all of a sudden she doesn't like her grandkids nearly as much, or she has a need and a pressing need for the money, she could cash this contract out and be completely whole. And the longer she waits, she's actually ahead of the game. So the Legacy Protector, the single premium, is a great contract for legacy planning, tax planning, and it works really well in the final expense arena as well. This is fully underwritten, but the cool thing that we underwrite the net amount of risk. So in the scenario you're looking at right now, instead of underwriting $1,000 for a 70-year-old, we're really underwriting about $40,000. So that the underwriting hurdle is a lot lower to the ground than a lot of people think.
We just got a quick note, a reminder from my buddy Jennifer over in underwriting, because she's actually listening to the call as well. God bless her. Even though
she's stalking us.
She's now she knows everything. She's just staying sharp. But she wanted me to remind everyone, it's like we try not to do trial apps, but that does not mean that we don't want the information ahead of time. So something that we do that most companies that I'm aware of don't do anymore is that you can actually get a contact and email right to the underwriters themselves. And Jennifer does the majority of it out there. And she's fantastic at it. You can actually just give her a thumbnail. Don't sugarcoat it. So this is the time for you on the phone. You don't want to waste 3.5 hours of windshield time to get out to your client because they're out in the middle of nowhere. And it's like, listen, before I come out, let me get some information from you. And if you're doing like meds, some of these of our folks on the call today do med sup, so you probably already have their medical information. So at this point, it's like, listen, get some basics on there. What medicines are you on? What in the last 5 years has been your medical history? Give me, what are you dealing with? Crohn's disease? Did you have, surgery of some kind? What's going on? And get that thumbnail sketch, and then their height, their weight, and their age. And if you want, and you're a little queasy about it, you look on the underwriting guide and going, golly gee whiz, I don't know what's going to happen. Get that email over to Jennifer, and she can give you a real assessment on what you're actually looking for. Is it going to be standard?
Within an hour. I mean, the turnaround time, David, with the underwriting team is incredible. So
it's crazy fast.
Yeah,
and they can always,
if you're not sure, reach out. We will give you a good idea on how that would look, if it's going to be rated, that kind of stuff. Our underwriting team does an awesome job.
And you can always text me because I'll just walk over. I'll take a look. I've got a pretty good feel on it, but if I have any doubts at all, I go over and talk to Jen anyway.
That's a long walk, isn't it?
Yeah, it's got to be 12, 14 strides.
Okay.
And then you go, Jen, what do you think? And she'll take a look at it, and within 5 minutes, we'll have an idea. Get right back to you. Now you're not wasting windshield time.
Exactly. Great point. Thanks for the input, Jen. I appreciate it. Let's talk about our irrevocable burial trust. A lot of questions on this, on the IBT. The most important thing to remember, it is not a separate insurance product by itself. It is simply a special ownership, and you can use any of our 3 whole life products in it. In order to set up a life policy, there's a couple of rules and regulations. You can designate it in IBT for your client if they're between the ages of 50 and 85. The maximum face amount for IBT is dictated by the state in which your client lives. I'm from Wisconsin, as you know, so I know we're at 15,000. I lived out in Pennsylvania for 3 years, and Pennsylvania is goofy because it's by county. So make sure if you're talking about setting up a life policy in the IBT, make sure you know the Medicaid rules that apply to the state you're dealing with. So regular underwriting, that's not a guaranteed issue. This is not what you would call an FE or one of those kind of graded death benefit products, but it is great for basic planning, and it is great for Medicaid planning. So if you set up a $15,000 policy and your client gets into a Medicaid spend down, no matter what happens, the state cannot take the life policy away from them. So it makes sense. Everyone in the country is allowed a burial trust. So make sure you're making this part of your conversation. And as I said earlier, our IBT is in-house. We do everything in-house. We're not jobbing it out. And our claims team does a great job with it. So
You're not, and they're not going to run into another one. Other than National Guardian Life, there's not another one on the market.
yeah, and they're having problems with their policies in general. So
Correct. So you're not going to walk into a house and have someone go, "Yeah, I've already got 4 IBT quotes in front of me." That's
right.
never.
Exactly. So it just makes good sense. It's available. And David, what's the additional cost to put a life policy in an IBT?
That would be zero.
Zero. Yeah, great point.
Zero. Big old
So it's just a designation, a special ownership. The cost of it is whatever the cost of the whole life policy that's in the trust. That's the cost of it. So give you an example, 70-year-old female, about $9,000 buys a $15,000 single premium whole life. It's good leverage for the client. And the good thing is, a lot of people say, well, I'll just go to the funeral home and prepay. Well, there's been a lot of consolidations and a lot of buyouts in the funeral home. This, by having policy in the IBT, this death benefit is portable. So if the funeral home where grandma wanted to be buried isn't there anymore, or she died down in Arizona because she was a snowbird and wanted to be buried down there, that doesn't affect the IBT. So just be aware of it. It makes it a lot more flexible than prepaying directly at a funeral home.
Hey Jeff, I've got a question. What would happen if I'm a smart young agent out there and I'm talking to someone about the IBT, because they're going to be getting, my client's going to be getting like 12,500 worth of insurance, and that fits under the IBT level. And the client's got cold feet. They're not 100% sure if they want to do something that's irrevocable, but they know they want to do the life insurance policy. So they go ahead and do the life insurance policy. We issue it, and like 6 months later, the next time I'm talking to the client, they're going, "Son of a gun, I really wanted to do this IBT. I was talking to my accountant. He thought they'd be a great idea. I wish I could go back and make it an IBT." Is that something
David,
that do?
that is a fair question, and I will wager that's happened multiple times in the history of our IBT. The answer is very simple. The agent goes and gets an IBT form, fills it out, has the client sign, and voila, the policy is now in the IBT. No additional charge. They can IBT it at any time as long as they're between the age of 50 and 85.
Son of a gun,
So,
that's awesome, Jeff.
That's pretty simple, yeah. And a lot of people, somebody's doing their final planning, and maybe they're a little early in their life doing it, but they want to get it out of the way. So do you really want to irrevocably assign something at age 65? Maybe not. But when they're 75, you can circle back and you definitely can do it. So great point. I appreciate the input, Dave.
Oh, and one question on that one. Just a reminder, every state that we're in, you can do an IBT. There are 3 exceptions right now. We don't have life insurance in California currently. It's been suspended, but we're thinking about bringing it back in here shortly. And the IBT was approved for that state. So as soon as we can sell life insurance there, we can do the IBT there. The other 2 states that are not in the hopper are Michigan and West Virginia. West Virginia, because their IBT allowance only goes up to $3,750, and our minimum face amount is $5,000, and Michigan doesn't allow it at all. So those are the 3 states that don't apply.
Yeah, Michigan, that's just insane. So
yes, correct.
Anyways, so we can sell life in Michigan, but they cannot be set up irrevocable. So
correct.
All right, we're going to change gears. We are going to talk about our flagship product, our fixed indexed annuity called the Aquila. It's the Aquila series because we do have 2 products. A 10-year product and a 5-year product, but we're going to focus primarily on the 10-year. So the 5-year is a good product. It's very, very similar, just a few differences because it's a shorter duration. Here's the at a glance. Modified single premium, as David likes to say, money can only go in the first year, and no more money can go in after first year. So year 2, no more money can go in. Issue age is 0 to 90. Little different than our fixed annuities. The minimum premium to open this contract is $10,000. Max premium's $1 million. You got more than that, call us. I think we picked up a $5 million last year.
Yep.
Because it was the right situation. But if you've got a big case, call us. We'll work through it. Works for non-qualified and qualified. Not a good deal. We won't use it for inherited IRAs because of the 10-year rule. So be aware of that. If you are rolling qualified money to us and they are an RMD age, make sure you take care of the RMD before the money gets here, because no money comes out in year one. So money goes in year one, no money comes out. 10-year surrender charge and contracts are issued daily. Embedded rider fees. These are embedded riders, no cost riders. We have a cumulative free withdrawal rider, which means starting in year two, you have a 10% free penalty free withdrawal. If you don't touch it in year two, in year three, it becomes 20%. You don't touch it then in year four, it becomes 30%, and it caps at 30%. If you use any of that, then the following anniversary, it resets back to 10%. We have a terminal illness and a nursing home rider, which is essentially waiver of surrender charge. And we have a cool thing, also free, wellness benefit enhancement rider. And here's one of the marketing pieces we have for the wellness benefit enhancement, as we like to call it, keep grandma out of the nursing home. Because this is not a nursing home benefit, it is for qualified home health care only. And let's say you've got a client who has an Aquila with us, and it's been 10 years, and they haven't turned the income on, and all of a sudden, they need help at home. They need transferring all the ADLs other than cognitive. Cognitive does not trigger this, and that's simply the one that is eliminated. The 6 activities of daily living, bathing, dressing, transferring, toileting, all that kind of stuff. So the scenario is grandma has a contract that's 10 years old, and she needs help at home. So the first step is to turn the GLWB, the Guaranteed Lifetime Withdrawal Benefit rider on. And let's say that rider generates $15,000 a year of guaranteed income. She then turns on the wellness benefit rider, and you can see 10 or more years on my screen, it doubles the GLWB. So if the GLWB is putting out $15,000 a year, she activates the wellness benefit, she's got $30,000 a year to help pay for her home care. In that scenario, statistically, grandma will never see the inside of a nursing home. And nobody wants to go to a nursing home. And if you need help and if you need care, the best place always to get it is your house. In your wellness benefit rider is great. I wish more people talked about it. There's no fee for it. It's just a great benefit. And I think it really can help people in the long run.
Yeah, it's not a long-term care product, but it can be used for a long-term care situation.
Correct. As long as it's home care.
Correct.
Back to the nuts and bolts. We have 3 interest crediting strategies. We've got the fixed bucket, and then we have a 1-year point-to-point using a participation rate, and then 2 point-to-point. Cool thing about the Aquila, and I do believe it is possibly the most consumer-friendly product in the market. It's very transparent. Our participation rates, which are very good par rates, have guaranteed par rates during the 10 years and actually after that as well. So if you're writing FIAs, all of us have seen it where, the client was offered a really attractive participation rate, and then 3 years later, the carrier just crunched it down to like ridiculous small amount. We won't, and we contractually cannot do that. So it makes a huge difference knowing that those par rates are guaranteed to not go like crazy low. I love to say this in a group. The Aquila has no caps, no spreads, and no MVAs. I like saying it so much, I'm going to say it again. No caps, no spreads, no MVAs. So once again, you'll probably never, ever have to say you're sorry to your client because we're a fraternal organization and our FIA product really reflects that we are fraternal. If you take any notes from this meeting whatsoever, write down fia.gcuusa.com. This is what we call our landing page. And if you've got any questions, and there's no password, so just Google it, and you can click on agent resources. You can take a look at the 2 indexes we offer. We have the Zoria from Barclays and the US Tech from Barclays. The US Tech is essentially the NASDAQ 100. You can look at our current participation rates. There's marketing materials, brochures. There's a contact list. If you got questions, you can call us all directly. There is where is it? Oh, this is an old screenshot. There's also a annuity by transaction paperwork form we call it the cheat sheet, and it will tell you every form you need, no matter what type of annuity you're writing and what type of transaction it is. So if it's a transfer or a rollover, a 1035, we've got a cheat sheet that will walk you step by step. So, and also on the very bottom, agent resources, that's where we keep our GCU webinars. So if you're looking to see what else we've talked about in the past, we keep it all there. Talking about our GLB options, we have 4. Marketing name, Income Elevate. We also call it option 1. Income Pro, option 2. Income Elite, option 3. And Income Elevate Plus, option 4. They all are a little different. They all give different benefits to your clients, which is why I like to refer to Aquila as a Swiss Army knife. So you've got these 4 different tools here, and depending on what you're trying to accomplish, you pick the appropriate tool. Options 4 do offer a true premium bonus, not a bonus going into the benefit base, not funny money, actual premium bonus. So if your client is 75 or younger and they put $100,000 into the Aquila and they pick either option 3 or 4, their account balance is currently $110,000. So bonuses are smaller as they get older, but they're still pretty substantial. This is a screenshot right from our brochure. This is the income factors we use to determine what the GLWB is going to pay out for a lifetime. So we use the benefit base to calculate the lifetime income, and it is age-based, and each age, as they get older, the income factor goes up. So let's talk all 4 and what they're good for. The scenario is a 69-year-old, $250,000 premium deposit, and what the income looks like in following years. So option 1, starting year 1, you can see the GLWB comes at $13,000. Option 2 is at $13,000, but option 3, which has the premium bonus, after year 1 has $15,000 of guaranteed lifetime income. Option 4 also has a bonus, so it comes at $14,000. But then you start looking at as the years go on. Option 1 in year 10 is at $30,000. Option 2, because it has enhanced benefit base, comes in at $42,000. Option 3 has an enhanced benefit base plus the bonus, so it comes in at $46,000. And option 4 has the bonus but lower par rates, so it does not come in. So if you're looking at option 4 for income down the road, probably not the best move. But options 2 and option 3, even at 20 years, they're kind of neck and neck. But if your client's looking for income, make sure you're running different scenarios, and our illustration does show all the different options side by side so you can make the best decision. But what if we're not talking about, if we're talking about accumulation value? So option 1 in year 5, same scenario, will be at $338. Option 2 will be $328. Option 3, $352. And option 4, $343. But if you look, if the longer you go, the more the contract has time to earn money and accumulate. Option 1 is really the best bet if your client is strictly looking for accumulation. 2 and 3 are not bad. They're pretty competitive. And option 4, because of the lower par rates, is not the right option. Don't forget, we've had this incentive, for 3 years now?
1, 2, 3. This is year 4.
Year 4. Okay, great. We call it the 10K giveaway. That name came from one of our IT guys, and he said it kind of flip, and we fell in love with it, and it became the 10K giveaway. So if you give us $3 million of premium during there, and it's issued premium, it has to be new money. So if you're doing any internal transfers, it doesn't count. But if you give us $3 million of issued premium, we will send you a $10,000 check. And same with life premium. The single premium does count. Give us $1 million of life premium, and you'll get a $10,000 check as well. And yes, you can get both. So the last 2 years, we've had an agent of ours, $10,000 check for the annuity side and a $10,000 check for the life side. But I think for the annuity side, we gave out, $25, $26 checks, and then multiple smaller checks. As you can see, 1.5 gets you $2,500. There's free money on the table. Take a look at it, and take advantage. Don't leave any money on the table.
Yeah, Nicole spent basically the entire month of February, generating checks.
She acts like an air traffic controller. She's got checks flying everywhere. Okay, this is it. If there's any questions, we can take them now. But if you got questions after the fact, you can call me. That's my cell phone. I represent, let's see, Michigan, Wisconsin, Minnesota, Indiana, Illinois, Iowa, and Missouri. But I don't care. If you see my number and you have a question about anything GCU, give me a call. David Ennis is the phone answerer extraordinaire. I believe, David, you will not answer it when you're in the shower, or is that correct?
Shower or sleeping?
Okay, shower and sleeping. David will his phone on a weekend. I will answer my phone on a weekend as well, but if it's kind of happy hour, I will answer it, but it might be more fun than informative. So just be aware of that.
I answered my phone when I
and
was in the
there's-
hospital until my wife took it away.
Yes, I was freaked out. So I was talking to your wife and I wanted David. So any licensing questions, get a hold of Deanna Diamond. That's her direct desk line. Nicole Gailey is also part of the team. That's her direct line. Sales desk people that we hired, what is it, about 2 months now or 3 months?
Just about 2 months now. We're like 8-9 weeks, I believe.
Okay. And that's Elizabeth and Nikki, and they have desk lines, and I apologize to them. I need to update these slides as well. So any questions we got going on?
Let's see. We got a few in here, partner. Let's see. So someone has to come and find out more about the 1+4. I hit it pretty hard. Swati, if you'd like to give me a shout, I'd be happy to give a primer to you one-on-one. Just call my phone number. I'll be here all day. Let's see. Does the 1+4 renewal rate, if not renewed, stay at the 1.5.1 illustrated? It goes the 1+4. It looks at whatever the Flex 5 new business rate is every year. So if the Flex 5 rate goes up to 5.4 next year at this time and it renews, then it's going to be 5.4 for another year. So the Flex 5 adjusts, month to month depending on what's going on. But the 1+4 only looks at the Flex 5 rate once a year. Okay, so years 2, 3, 4, and 5, it just looks at it once a year, and that's what that's rate's going to be in years 2, 3, 4, and 5. Let's see, what's the GCU 1+4 annuity rate? The first year rate is 4.5, or 4.15 rather. That's right on the rate card. You can look at the website and see it. Will the GCU agent portal be discussed today? No, but you can give me a call. We can, but that's its own conversation right now. The good side is that there's a new agent portal. It works 1,000 times better than the old agent portal, and we are slowly but surely sort of bringing people over in batches so that we don't, if we do something sideways, we don't screw up a whole bunch of people.
And if they're on the old portal currently, shoot us an email. We'll put you to the front of the line. We'll get you in the new portal. It's definitely worth sending an email because the new portal, even though it's still kind of a work in progress, it is light years ahead of the old one. Yeah, light years. It's so much user friendly, easy to find what you're looking for. I'm really pleased with it. We built it in house. We've invested a ton of money into it, and if you're not in it, get in it. A lot of people have gotten invites and new passwords and stuff to get in it, and either they didn't see the invite or they ignored it or something like that. And then when they call and complain that the old portal's down, well, let's get you in because the old portal is going to go away. So if you're not in it, let's get you in.
Yeah, we'll make sure that everyone gets over. But yeah, the old portal is definitely going away. Let's see. You are sending recording. No, we're going to upload it. So on that hey John, we're actually going to upload the whole webinar. So on that fia.gcuusa.com website that we told you to make sure that you save that URL, on the bottom left-hand corner, all the way down the bottom where it says GCU recordings, GCU webinars, that's it. It'll be up there. Give us 2-3 business days because we have to send it down to IT and then they upload it. So middle of next week, it'll be up. Let's see, how long until I get access to the agent portal after Reg Ed training? As long as everything is ready, if you're trying to get appointed, there's an email you can send to Deanna. But generally speaking, after you do the Reg Ed training, assuming your background check is back, because that normally takes about 5 business days, you should be probably up and running within 5-6 business days. How about immediate age minimum? I'm not 100% sure what that question is. It's from Stewart's. How about immediates, age? So I'm not sure. Stuart, you know my number. Just give me a call and you can ask. I'm not sure exactly how to answer that. Jerry, new portal, Aquila statements on a timely manner. They're becoming more timely every day, buddy. So it used to be, it was probably 2 weeks afterwards. Now I think we're down to like, 9, 10 days. And as we get more and more people on there, because we still have to do it manually. We can't automate it yet until we get everyone over there. So it's coming faster. And as soon as we get everybody over and then make sure everything's smooth, then we can automate it. But we can't automate it until everything's done. So bear with us. We're getting there. Let's see. I would like to have a new portal for GCU. Okay, Marilyn. I'll see if you're in the queue, and I can talk to Deanna about getting you on, today or Monday. And
See how easy that was?
I think that's it.
Awesome. Well, if there are no other questions, I really, really appreciate your time, your attention, and everything you do for GCU and our members. I truly believe in the GCU message and mission, and it's a great team back in the home office. And it's weird. I spent 3 years of my life there, and I talk to them on the phone quite a bit, but I miss everyone there. But working with the agents in the field is really, I guess, my calling. So, but if you're looking at writing something, don't hesitate to check us out. We've got a product that fits just about every possible need. So, David, any final words?
Jerry just raised his hand. I want in the new portal too. Not a problem, Jerry. I'll talk to Deanna along when I'm talking about Maryland.
Perfect.
Everything, and Jeff summed it up. Jeffrey, we miss you here, but you're doing God's work out there in the hinterlands of Wisconsin. So you keep fighting the good fight out there. But anyone that needs something, you can always get a hold of me. You can always get a hold of Jeff. Our cell phones are right there, and Jeff wasn't lying. If I'm alive, I'll answer the phone or I'll call you back. If I don't call someone back in a timely manner, send flowers because I'm probably dead.
That is so true. So,
okay, guys, I think that's it.
That's it. All right. Okay. Have a great weekend, and we'll talk to you again soon.
Happy selling, folks.